Hey guys, it's Dave Barnett from davidcbarnett.com. There's a picture of me right there without my winter beard on. The reason I'm making this video today is I got a great question the other day on Quora, and Quora.com is a website where people ask questions, and I sometimes go on there and answer questions about small business and stuff, of course, to try to lure people over to my blog and my YouTube channel to boost my numbers, because sometimes my viewers don't share the videos enough. Right? Okay. So anyway, so here's the question is, a person simply asked, can I apply for a loan if I have poor credit history? And I thought it was a great way to introduce the idea here about the 5 C's of lending. Because if you talk to any of the old school bankers, if you can find one, who used to be a banker when bankers were actually banking. And what I mean by that is if you go into a bank today and you talk to a banker, a commercial loan officer, whatever, they're actually salespeople. They don't actually make lending decisions. They try to fill in applications with people and submit those to underwriters. They divided that old banker job in two. But at one point, back in the 60s and 70s, for example, you'd walk into a bank and you'd talk to a banker, and the banker would actually be making the lending decision, and they would always have their 5 C's. And one of the 5 C's is character. Does this person have a good reputation? Are they well known in the community? Do people believe in them? Do they have good family values, etc.? And of course, back in the day when people lived in smaller communities, the banker could know your reputation. They would know that if you went, if you had been in the Boy Scouts and if you were a member of a church, for example, if you had worked somewhere, they would know if you'd ever been, accused of stealing or had gotten into trouble with the police or anything like that. And in today's modern world, that character has been replaced by the credit score. And so what the credit score tries to measure is it measures how good are you at paying your bills on time, and have you ever, not paid back a loan, that kind of thing. So this person is saying, I've got a poor credit history, can I get a loan? And the 4 other C's are collateral, capital, cash flow, or capacity, and conditions. And so let's just talk a little bit about them. I answered them here on the Quora page, but basically the way to think about this is if you've got poor character, if the other 4 C's are strong enough, then in fact you may actually qualify for a loan. So collateral is what on earth can the bank get their hands on if you don't pay? So what that means is if you've got good collateral for the loan, then there's a plan B for the lender. So if you want to borrow for a house, for example, or for a car, something like that, something they can take back and they will be able to sell, then that's going to be, a positive mitigating factor, because there's a plan B other than just trusting you to pay back the loan. Capital is what exactly are you going to put in as far as your contribution, because bankers like to see that if they need to collect on a loan, that you're going to hurt as well. And the way they do that is by making sure you have what they call skin in the game. So if you are going to buy something for $1,000 and you put down $400 of that and then don't pay the loan and the bank takes the item from you, then you've lost $400. That hurts. And so what you typically see when people have poor credit is that they're required to make a bigger down payment. And this would represent a bigger contribution of capital, because the bigger the down payment, the lower the risk for the bank. Because, of course, if the bank has to collect the collateral, seize it, and sell it, they're going to sell it as fast as they can, which often means that they're going to sell it at a wholesale price, not a retail price. And if you've made a big down payment, there's a higher likelihood that they will be able to recoup their investment. Cash flow or capacity means, do you actually have the spare income floating around in your pocket to make the payments? So any lender who's going to make a loan to you is going to do an analysis of your income and expenses to make sure that you actually do have enough money to make a loan. Now, in my book, Invest Local, which you can find on Amazon, and look, there's a picture of it there. It's 5-star rated, Kindle as well. In this book, what I advise people who are making local small business loans is that if you can make a loan that actually improves the cash flow condition of the borrower, then that's the big win-win. It's one of my golden rules. So I recently did a loan for someone for a high-end label printer, And what they were doing, they have a little business where they had to buy these labels for a consumer product that they manufacture. And they were spending a lot of money having these labels printed by a printer at a print shop. And the quality wasn't actually that great. And so I lent them the money to buy one of these fancy thermal label printers. And they're basically saving money every month because of the loan I made. So now they're no longer paying the printer. They're going to pay me the loan payment, and then they're going to buy their materials to make the labels. But at the end of the day, they save. So my loan actually improved their capacity or their cash flow, which again makes it safer for me because they have the money to pay me. They're saving money in their business. And then the last item, the last C of the 5 C's of lending, of course, are conditions. Is what are you going to be using the money for? And so this will be important if it's a business loan, for example, because if you say, I'm going to use the money for an advertising campaign, or I'm going to use the money to increase my inventory in the lead up to Christmas, those are two very different things. If you buy inventory with the money, then you've got something to liquidate that you can turn back into cash. If you're going to take the money and put it into advertising and the advertising doesn't work, well, the money's gone and there's nothing really there to show for it. So I just thought that would be interesting for you guys. Again, if you haven't already, my very first bestseller was Invest Local. You can get it over at Amazon. It's available for Kindle and paperback. And keep the questions coming. Come on over to davidcbarnett.com. Over here on the left, you can sign up for my email list, get a video just like this one every week in your inbox. And well, thank you very much, and we'll see you next time. Bye.